been an adventurous 12 months since EML 2020, as we've seen customers use our EML products and technology in new and exciting ways, including the creation of digital government stimulus packages that support both getting the money out instantly to individuals, as well as enabling local spending and encouraging local spending. We've seen the launch of a world-first crypto card-based solution, which enables end users to be able to simply tap for the first time and be able to spend with crypto. We've also seen instant incentive disbursements for people, being able to encourage them for COVID vaccines and being able to incentivize people to take that vaccine. And many more: banking as a service, digital banking, earned wage access, gaming, buy now, pay later, lending and disbursement solutions that we'll have the opportunity to hear about further in today's jam-packed agenda. And we expand into one of the most disruptive forces on banking ecosystem globally, open banking, through the acquisition of Centennial Group and their Nuapay product suite. The Nuapay product suite is pioneering a new way of making payments for PSPs, fintechs, and corporates alike. And we'll jump over to Brian, our Chief Commercial Officer of Nuapay, shortly to delve into some of these disruptive use cases. Before we do, I want to introduce Sanjay Sakrani, Managing Director at global management consultancy and investment firm KBW. Sanjay leads the research efforts across the consumer finance and payment industries and has acquired quite the pedigree in this space over his career. Sanjay joins us today to discuss the latest developments in open banking across the globe and what implications this has on the money movement value chain, both domestically and internationally. Sanjay, welcome, and thanks for joining us at EML.CON 2021. It's been a long time coming for those that have been embedded in payments for the last couple of years, but it really feels like, open banking's just started to heat up over the last 12 months and become a much bigger focus, not just for those that were looking to disrupt the traditions of banking and financial services, but now also from those more incumbents and the traditional players in this space. Keen to hear from you, Sanjay. What are the latest developments that you've seen across the world over the last 12 months?
Thanks. So most certainly open banking is quite a topical discussion, as it's a topic that many of our investors, clients, as well as our companies are talking about. I think it's happening both organically and inorganically around the world, and it's being driven by the fact that there's a big push to electronify payments, and I think there's a huge addressable market. I think every region has approached it in a very different way. For example, in the United States, we haven't really had a regulatory push to move towards open banking, but companies have organized around it, and a company like Plaid has become a central enabler of access for banks, for consumers to their bank accounts. And also a central network to enable fintechs to attach those consumers' bank accounts to their platform. So I think that's a really interesting phenomenon here in the United States. And then obviously in other geographies like Europe, it's been driven quite significantly by the government. And I'm sure we'll talk about it in a little bit.
Yeah, absolutely. And building on that there, I guess one of the interesting questions about that there is, and I'm keen to hear your perspective on, industry-led versus regulated-led, like what's better, and what do you think is going to be more successful over the long term?
Yeah, it's really interesting because I feel like in Europe, open banking was a little bit of a solution looking for a problem, right? Whereas in the United States, we've created solutions for pain points for fintechs. For example, open banking has enabled consumers to sign up for embedded financial services. I recently refinanced my mortgage and I used open banking to really prove all my assets across my bank accounts. So we've actually seen platforms build out use cases for the use of open banking. In Europe, I think the concept of open banking was derived to actually create some of these use cases. And I think those are still under development. And that's why, a little bit of the chatter we hear from Europe is it's been, open banking has been underwhelming thus far. However, I think one of the things that, is quite interesting in Europe, and I think it will be a test pilot for a number of other geographies, is that there's a big push by the governments to create an equal playing field, whether it be through the incentivization mechanisms related to interchange, and then incentivizing fintechs, therefore, to be able to create and compete against traditional forms. And so I think, even though it's been slow in Europe, I think, we're seeing quite a bit of momentum, and there's a lot of companies organized around this initiative. And I think, there's going to be a lot more to be discussed there. Whereas here, it's been a little bit slower, but partly because it's being driven by the private industry. And, we'll see which one works better, but at least up until this time, I think it would feel like the US has more use cases than the others.
Yeah. And some of those use cases you touched on there are really starting to hone in on that power of the data, right, with open banking transactions. The other component of open banking that we're starting to see, and from EML's perspective, we've been very interested in, is that enablement of the payment and then the payment initiation that goes through open banking rails. With that there in mind, there's some bold statements out there saying that, it's the start to the end of card payments and the schemes. And we've seen, Visa and MasterCard take a very strategic interest in this lately too, with, Visa's acquisition of Tink for, I think it was about 1.7 billion euro. And MasterCard's also acquisition of A and FinCity. I'm keen to get your thoughts on, what does this mean for the card schemes, and where do you see that playing out?
See, to me, I believe that the card schemes they're going to be a critical player in the development of open banking, and they might, in fact, be the rails that are utilized for the ubiquitous movement of money. I think we have to separate what open banking is attempting to do. There's going to be specific use cases on the front end or the back end for vendors, right, to actually embed themselves in functions and features that are today very difficult to do. But the actual movement of money, I think that Visa and MasterCard do it quite effectively, quite ubiquitously, and quite cheaply relative to their peer set. There's also a bunch of different benefits attached to that transaction, whether it be fraud advantages, chargeback related services, among others, that I think the networks offer on a global basis at scale at a very reasonable price. Typically, when we hear about the price point for a real-time ACH transaction or an open banking transaction, I think that is more directionally related to the Visa and MasterCard fee rather than the actual discount rate that merchants are typically charged. So Visa and MasterCard make a fraction of the discount rate. We've estimated somewhere between 10 and 15 basis points, right? And so if you then line that up with what a typical ACH transaction costs, and then layer on some of the ancillary services and benefits I mentioned, Visa and MasterCard, among others, are very competitive. And so I do think there are specific use cases where open banking and ACH-related transactions might be better. Maybe it's high dollar denomination type transactions, recurring payments, for example. But as a whole, I see Visa and MasterCard being part of the solution rather than being disintermediated. I also would note that, and I'd be remiss not to talk about, the fact that Visa and MasterCard have also acquired assets that allow them to tap into the ACH networks. MasterCard is actually an infrastructure player. They acquired VocaLink. Visa is obviously, built a network of correspondent relationships to actually access the ACH networks around the world. So I think their idea of the future is, having a multitude of options to work from in terms of the rails to choose. And I think that might be a more optimal strategy depending on the use case.
Yep. Interesting. And with that there in mind, I guess you touched on a couple of the advantages of the scheme rails, being, that ability to manage fraud, the ubiquity of it too. Some of those also, you could argue, are some of the barriers to, really open banking adoption across the group. And I think, in your recent research that your team undertook, you spoke about that being, the chargeback protection, the rewards, and the consumer trust being, key enablers or key ingredients to success, but also the barriers of adoption. How do you see us being able to address those? Or do you see the pros of open banking really just overcoming those and us not needing to address those to solve for adoption?
I think it's going to come down to the use case and what the revenue source is and how valuable the actual payment transaction is to providing a service and securing that revenue source. So let me give you an example. For example, at some point, PayPal would like to be a super app and they'd like to find methods of engaging with businesses and consumers and providing marketing like services that's direct consumers to other platforms, right? At that point in time, it might be that they are able to secure a transaction, a revenue source outside of the payment. And therefore, they wouldn't mind necessarily using a higher base payment form rather than a lower base payment form. So in my opinion, it's ultimately going to come down to what the specific use case is and then how they work backwards to sort of fulfill the transaction. To me, payments is sort of fulfillment at some point in the future. And I think ultimately how we pick and choose how we're going to transact is going to be based on, as a consumer, what our incentives are to transact a certain way. Today, in today's world, we've been behaviorally sort of conditioned to use our card because we've gotten rewards, whether it be in the United States, in Europe, less so today, but more so earlier, even in Australia, right? We used to get rewards and that built our behavior to use our card. If over time we get a discount for using PayPal, then we're going to use PayPal, right? That might be more significant than the reward we're going to get. So I think it's ultimately going to come down to that. And obviously, we're going to be accustomed to some of the protections that we've got in the other way, and we're going to need those in order to make that change. So I guess the answer to your question is ultimately it's going to be hard to disrupt what we have because there's significant value in the way we transact today using cards. But if there's something that can come in the future that gives you more value or equal value, and then the value on the card diminishes, then I think you'll make your choice that way.
And you touched a little bit there on, there'll be specific use cases that will be successful and those that won't. What do you see as, what are some of those that you see being successful in that near term there? And I think you touched on a couple earlier with the Plaid example.
Yeah, I think large dollar denominations, recurring payments like rent checks, perhaps airline-related ticket consumption, right? The only issue with the airline tickets, because the airlines would rather not pay the discount rate, but they also have big loyalty programs attached to cards that sort of are another incentivization tool for them to retain their customers. So I think where the use cases are going to be most prevalent are where it's not as frequent use, larger dollar denominations. And so I think, over time, that seems to disrupt more check-based and ACH-based type transactions today.
Yep. Excellent. Sanjay, keen to hear your perspective also on how payments companies like email payments should be considering open banking in their strategy over the next couple of years and how you see that implicating, the business model of similar payment companies.
So absolutely. I think that there's going to be a number of different use cases in many different forms and factors for open banking. And there's going to be a need for a central source of integration. An example in the United States is a company I mentioned, like Plaid, right? They have become a little bit of a hub for all the banks to make available their APIs through the use of one API from Plaid. So that Plaid has become quite a central source for open banking in the United States. I understand the assets that EML has acquired are somewhat like that as well inside of Europe. And so over time, more and more use cases will develop, and they're going to require different types of integrations and different types of form factors potentially. And I think companies like EML can help the evolution of those different use cases. So there's going to be a need for other intermediaries, and companies like EML to get involved in that fashion.
Yeah, and it's a really good point too, because I think, we see it as well, just talking to clients, where more and more they're not coming to us and saying, I need a particular product and I'm going to set and forget it for the next 5 years, and that's going to be the key to my success. They're looking for dynamic platforms that can integrate multitudes of value into their business, but can also be able to shift and flex with their end users' needs based on what they see and the behaviors that are changing in that digital world. So we can definitely see some of that trend already starting to play out, I guess, in some of those needs from clients.
And there's also going to be a lot of different options for your clients to choose from. It may not just be open banking. It may be card-based payments. It may be digital wallets. It might be, other types of form factors. And so I think companies like EML can provide an essential role to payment service providers as well as merchants and other entities to help them think through, all their different options.
Yeah, excellent. I mean, one of those examples that we're seeing already is with gaming, right? Which you wouldn't see as the most obvious one for open banking, but we've been really able to get help gaming providers across the globe be able to get those winnings out to their customers in real time. But now with the use of integrating open banking into that platform, they can not only start to see money move in faster, but they've got a much greater understanding or visibility of that customer's profile to be able to, counteract the risk of fraud, which is often, the case of setting up a gaming account for the first time. And secondly, also start to, be able to help consumers and end users be better with their money and, create that, I guess, financial wellness piece that plays, quite interestingly into the gaming space as well and the entertainment space. Sanjay, I could keep talking to you all day about this, and it's a fascinating discussion point. It's definitely moving a lot, and it's got a lot of different facets to it, as do quite a few other trends that your team are closely looking at when it comes to the disruption of the ecosystem around payments and financial services globally. But we need to wrap it up. I've got one last question for you. If you're looking into the future of payments and how money moves globally, I'm keen to just get a couple of your predictions of what you see that shaping up with in the context of open banking and real-time account payments in the next couple of years.
Wow, that's a great question. I would say I believe the future of open banking and electronic payments is bright. I think a lot of the success of any given payment form is going to be based on the customer value proposition. So the consumer value proposition is the key, right? What might be great for the merchant might not be great for the consumer and vice versa. And ultimately, the merchant wants to secure the transaction. So there's always going to be this push and pull. And, it may not end up being the lowest cost transaction that might be the optimal transaction for a merchant in that example. So customer value proposition is key. All right. Number two is how governments get involved. I believe the European example is a really interesting one, and we should keep an eye on how that plays out because they pushed open banking into the country and they're trying to solve for the fragmentation of different payment forms across borders. And they've also significantly reduced the cost of entry into the market by reducing interchange. Right? So reducing interchange took away rewards, which is a primary incentivization mechanism to get people to use cards. And now it's created a level playing field. And we're going to see if third parties can innovate and create a customer value proposition that's robust enough to disrupt cards. TBD, right? And so I think those are critical components of sort of where everything goes. And the third one I just say is the big tech companies are probably going to be big players and big deciders of sort of how all of this evolves. because they are, they control a lot of our abilities to transact mobily, especially, right? And they have significant control over the hardware in many cases and software, or one part of that value chain. And so if they want to make it difficult for third parties to do things, they can. Or if they're just in the market to sell their products and goods, then they won't. And so they're going to be big factors in this as well. And we'll have to see how they play their game. So I think those are sort of the critical components of the future of payments and also the future of open banking.
Fantastic. We'll look back in a couple of years and see how that holds true. Thank you very much, Sanjay, for joining us here at EML.CON 2021, and look forward to continuing discussions with you over the next 12 months.
Anytime. Thank you.